Hey folks, Dan Frio here with your real estate news for July 21st, 2025. So if you're trying to figure out what's going on with these over here, you're looking to buy or refinance, well, you come to the right channel. Every day what I do is I talk about what's affecting these and the whys behind it. Today we're going to talk about is just some of the economic news that's coming out today. There's really not a lot of economic news coming out. So then we're going to try to take the data that is coming out and what's it going to do to the Federal Reserve. Yeah, the Federal Reserve, they're still prominent when it comes to mortgage rates and interest rates, that and as well as the tariff news that we're focusing in on. So the tariff news is supposed to be basically given to us within the next 2 weeks by August 1st. But so now we're trying to focus in on what the Federal Reserve is going to do based on some of this news. And also ultimately, what's going to go on with these things over through here. So my name is Dan Frio. Like I said, I do this report twice a day so you can understand what's going on with these and the whys behind it. And the reason why I do it, folks, I'm a mortgage loan officer. I'm licensed in all 50 states as well as Puerto Rico. So if you're out there looking to buy or refinance, I'd love to be able to help you. I've been doing this over 35 years. And our slogan here is one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? You got to check that out at the end of this video. I'll explain to you exactly what I do in the house and the whys behind it. So let's get over to the news that we have for today. So last week, mortgage rates, they ticked up, maybe a couple points, and they went down a couple points. Well, this week we'll probably have the same thing unless we get really concrete information on tariffs. But the news right now is everybody's focusing in on what's the state of the economy, because we're trying to focus in on what the Federal Reserve looks at and what they might be able to do at the next meeting. But I think we know what's going to happen in the next meeting. Now we're focusing in on what's going to happen at the September meeting. So right now we just have a little bit of economic news coming in this week. And again, we're trying to figure out what the Federal Reserve is going to do in 9 days because, yes, they meet in 9 days. So let's get over to the economic calendar that we have for this week or the next few days. Not really much here. We have today U.S. leading indicators. So that's really not going to sway the markets any which way, I don't think. Federal Reserve, Powell speaks tomorrow, FOMC meeting. Another person speaks tomorrow. Their existing home sales on Wednesday. And then Thursday, we have building permits. And then we start seeing a little bit of data that the Federal Reserve will be looking at. Continued jobless claims, manufacturing, PMI, and so forth. And then on Friday, what do we have? Durable goods orders to just show, how much people are still ordering or buying. So not a lot packed in this. But again, we're focusing on what the Federal Reserve is going to do in 9 days. So let's get over to how the markets are faring today, because here's the data we have for today. Nothing. So let's get over to the markets. Right now, we have the MBS market, which is mortgage bonds, up 12 ticks. Loving it. It's coming down just a little bit from where we were. But if you're new to the channel, what we focus in on this channel is we focus in on mortgage rates. And how we do that is this right through here. This is a mortgage bond. If you see up the corner there, it says MBS. It's a mortgage-backed security. So it's a bond that trades on Wall Street. And the yield on this thing is the biggest component of your mortgage rate. Let me explain to you guys, the newbies out there, how this works. So this is a bond, and I'm going to explain to you how if the price goes up that you're seeing right through here, well, it's not going up too much right now, but if you look at a 1 month chart, let's see what a 1 month chart looks like. Man, that's flat too. 3 month chart, okay, it's up a little bit. So here's how the bond market works, and any bond, but I want to explain to you mortgage bonds. We focus in on every day, we look at this and see what it's doing. Well, it gives us the price of the bond, 99.39, it's up 12 ticks. What does that mean? Because if you look at any other bond, you're going to see this. Well, the yield on the 10-year Treasury today is 4.377. Well, what's the yield on the MBS? Don't really know. So how do you figure this out? Well, here's the easiest way to calculate what's going on with mortgage rates. Okay, so as this price goes up, rates are coming down. Let me explain how bonds work. Okay, so let's say you have a bond, and it could be, in this case, a mortgage bond. Let's say when it comes to maturity, its value is worth $100. Okay, so I'm going to show you how if the price goes up, yields come down. So let's say, in the past, I gave you $50 for that bond. Okay, and we know the maturity price is $100. So I give you $50 at one point, and then I sit on the bond, and then when the bond matures, I hand you the bond, and you give me my $50 back. That's the coupon price of the bond. That's what's the bond's worth. Okay, so what happened to my investment? I invested $50. I got back $100. I had 100% return. Okay, so now let's drive up the price. So at $50, my return was 100%. Okay, so now let's drive the price up to $100. just to make it as simple as I can. So now I paid you $100 at one point for the bond, and you gave me the bond. Well, I waited, and then my bond came to maturity. I hand it back to you, and you give me $100 back. That's the bond's maturity. What was my yield? I gave you $100. I get $100 back. My yield is 0. Okay, so do you see how when I paid you $50, a lower price, my yield was 100%. As I paid a higher price, the yield went to 0. So as you pay a higher price for a bond, the yields come down, and that's how this works. So this mortgage bond is the biggest component of your mortgage rate. So you take what's called LLPAs, that's loan level price adjustments, plus a bank's, basically we'll say the bank's profit margin equals the mortgage rate that you're provided. Okay, so that's how this works. And this is what we're seeing so far today. So the market's up 12 ticks. So that means mortgage rates are going to come down a little bit today. So we might see 6.8. I want this thing to go down to 6.5 because the markets would be flooded with business at that time. But only time's going to tell on that part of it. So based on the really no economic news we have, let's get over to the breaking news on Wall Street. We have Treasury Secretary Bessent calls for a review of the entire Federal Reserve. Now they're kicking the can on that again. You guys kind of know how I feel on that. I think the Federal Reserve should be its own entity. They shouldn't be controlled by the president. So I think what the president's doing at this time is absolutely wrong. So I'm not a huge Trumper, folks. When it comes to a lot of things, when the administration on any side does something I don't really appreciate, I'll call it out for you. Let's see over here. U.S. plays hardball on tariffs. Deadline is U.S. battles for deals. So this is basically going to be what the headlines are focused in on and how the markets unfortunately go for the day. So let's get over to see how the markets are faring today. So far, we have a Cinderella story. Now, here's what I call a Cinderella story, folks, is when all the indices across the board are up. So we have the Dow Jones up, the S&P up. I think it might be teetering, still at record highs. NASDAQ up. You have oil down, and why we focus in on this is a huge piece of inflation. So if you see oil go down to $65 a barrel, maybe down to $60 a barrel, inflation will be coming down and be coming down quite a bit because oil is the lifeblood of our economy. It still is, folks. And then you have the U.S. Treasury or interest rates actually dropping as well. Let's go over to the cryptocurrencies, and it continues that. So we're at 118,000 on Bitcoin. So look at it. The markets right across the board are up. We have the oil down, we have the interest rates down, and we have cryptocurrency up. I'm thinking this is a great day, folks. So if you ever follow me on a weekly basis, I do what's called Stock Talk Tuesday. We'll be talking about stocks, so you can also understand how the stock market works, not only just the stock market, but interest rates and mortgages as well. Now let's get over to the Federal Reserve, what they monitor. So this is what they monitor on a basis. This is why the Federal Reserve was created, folks. They were created to control inflation, the jobs market, to keep the employment market as high as it can, and also they focus in on GDP to see how the economy is faring. Right now, if you look at inflation, it keeps ticking down. We're waiting just for the inflation front to pop in. When are the tariffs actually going to hit this? I don't know, and everybody's been waiting for this. So unless we have a big spike in inflation, I don't really think the economy is going to go in a spiral downwards anytime soon. We had the unemployment rate recently just come in actually better than expected. So this is the news that the Federal Reserve is rolling into. So if I'm them, I'm sitting there saying, well, am I going to cut rates at this meeting? Well, let's check the probability of that. So for that, we go over to the CME FedWatch group, and we go down through here. This is the probability that the Federal Reserve will be cutting rates or not. So if you go over through here, here's the meetings that are coming out. We have a July 30th meeting coming out. The federal funds rate right across through here. Here's the target rates. We're at 4.25 and 4.5. If you don't believe me, I'll go right over to here and explain that to you. This is what the Federal Reserve actually controls. This is that number where the government or our president keeps saying, okay, Fed, you need to lower rates because this is way too high. If you have inflation, let's say you have inflation at 3. This is the inflation level that the Federal Reserve monitors, but a lot of people say this isn't accurate. Let's just say the inflation rate's 3. Okay, the federal funds rate should pretty much mock that rate. So we're at least 1%, maybe a 1.5% over in yield when it comes to this. That's why the government right now, the federal government is saying, Federal Reserve, you need to drop rates so we can level out the yield curve and just basically start balancing everything out. So if you're confused with this and some of the things I said, please tune in daily, because as you watch daily, you're going to understand the economics behind real estate and how actually mortgage rates work. That's my whole point, and that's my goal. And the reason why, folks, is I'm actually a federally licensed mortgage loan officer. Let me explain to you what I do. So I've been in this business for 36 years, folks. I would love to work for you guys, put my experience and my skills to work for you. Here's the points that I can address for you. Do we have the programs for you? We do. Okay, I'm set up with 33 other lenders. Am I in the states that you're looking in? I am, because I'm licensed in all 50 states as well as Puerto Rico. So here's what I do. I work at a federal bank. That gives me a federal license throughout the whole country. Unique thing about our bank is we're set up with 33 other lenders. And why we did that is to help you. What are you looking for when you're trying to seek out a mortgage? Well, you're looking and watching this video to understand how mortgages work, understand the real estate process. Well, if you're actually in the process of buying or refinancing right now, here's the process we have for you. You're most likely going to say, okay, I got to get 3 or 4 quotes. So you call this bank and then that lender and maybe that credit union. Well, they're all going to have to pull your credit and you're going to have to upload all this information. Wonder if I can do this and all this for you in one application, one credit pool. And that's what we do right through here. So what I do is I take your application, I take your credit, I get you approved, and then what I do is start shopping you with up to 34 different lenders that we have right now. Think, you couldn't do that on your own. So I'm taking your application and getting you 34 different rate quotes and then offering you the best one that we have. So if you have the ability to do that, God bless you. If you don't, check out my website. Here's what you have at the website. You can give us a call to explain, go over your situation so we can understand what's going on and guide you in the right direction. If you want to check out some videos on it, if you're looking to buy a house, check out this video right through here. This might give you up to $7,000 in down payment assistance. So this is income based. So if you're looking to buy a house, check out this. If you're looking to refinance and you're in the process right now, check out this loan estimate review we have. So if you've already got a quote or 2 or 3, pick the best quote you got, click this and upload it. I'll review it, do a personalized video right back to you to let you know what we can do. And in most cases, we're saving you money on the rate. We're saving you money on the fees. So just think, if you can get a low rate and lower fees, why not make the switch? So that's our report for this morning, folks. I'll be back later today to explain how the market news is affecting these things over here, which is a mortgage bond that ultimately will be affecting these things over through here. So hopefully you learned a little bit of something today. But if you're out there looking to buy or refinance, love to be able to work for you. So just check us out. If you need some assistance, give us a call or just reach out to us. You can reach out to me this way as well. Go to therateupdate.com and you can just ask Dan a question right up through here. It'll go directly to me, and I'll most likely do a video back for you on that question as well. So thanks for watching, guys. If you need some assistance, reach out to us. Otherwise, have a fantastic day. Be safe, and I'll see you later today at the closing bell. Bye-bye.